Right, let's bring in Kevin Green, senior markets correspondent, right away to help set up the action today. Looks like we're going to be in big time rally mode this morning. We've got a big catalyst. It looks like the Treasury Secretary was working all weekend, not working for the weekend, working all weekend. So catch people up on where things stand between the U.S. and China.
Yeah, we definitely saw some positive developments over the weekend when it came to the China-U.S. Trade negotiations. What's actually very funny, Diane, it turned into like a reality TV show, seeing some of the updates over the weekend. And some, market participants were a little bit concerned about, some of the earlier developments. But we have seen that both countries have rolled back their tariff levels here. They're going to be cutting it from 125 to 10% here for these reciprocal tariffs for each country. Now, for the U.S., we still have in place the fentanyl tariffs of around 20%. So for the U.S. side, 30% tariffs on China, and then for China, for us, around 10%. And then there's still some restrictions in place when it comes to rare earth metals from China. That's the conversation right now. But it does appear that this is going to be, let's say, a 90-day pause here when it comes to this escalation as they try to work out a deal here in the future. And you are seeing, obviously, equities rallying to the upside. Yields are also moving higher, too, getting close to that 4.5% if you're looking at the 10-year Treasury, and the dollar is gaining a little bit of strength here. So there's two things. One, obviously, this is really good developments overall, but I think the market's also a little bit shocked that we saw the tariffs coming down below that 50% level. It seems like that was the whisper on Friday, that if they were going to see some cuts, it would go down to around 50%. That was also being reported by Reuters in an article on Thursday here. So overall, we are seeing a risk on tone in the market, especially when you're kind of looking at, not only just the broad equity market, but the industrial sector seeing a nice little bit. If you're looking at companies like Union Pacific, that's obviously going to have impact or see some tailwinds here when it comes to the shipping matter, because the warehouses over on the West Coast are really stacked up. So UNP is going to be a beneficiary of that. You're seeing liquefied natural gas companies catching a little bit of a bid, maybe a hope that a deal can actually be made with China. China does not import our LNG at all, but they're the largest consumer, or the second largest consumer of LNG around the world. And you're also seeing agricultural products like soybeans catching a bid as well. So I think the very interesting part of this over the next couple of months is going to be the economic data, Diane. I think the Fed, hindsight, Fed was actually right to hold rates where they were, right, because of a situation like this. And let's see if we actually see another resurgence of imports coming into the United States, and what the impact is going to be for GDP for the second quarter. I think that's probably going to be the biggest wild card. But for now, this is really good news for the equity markets, really good news for the shippers as well. We'll probably see the shipping data actually update over around a 3 to 4 week period. It's not going to be overnight that all of these ships are going to start coming into ports. It takes around 2 to 3 weeks to get them scheduled. So we might start seeing these ports starting to, fill up a little bit more. Be mindful, though, that these tariffs are still elevated and they're still aggressive compared to what we've seen from historical norms. So it will have an impact when it comes to prices, but just not as much of an embargo style type of restriction that we've seen prior to this weekend.
Yeah, I mean, it's certainly one of the things that stood out to me was what the Treasury Secretary said about essentially they don't want to decouple, and where things were, it was essentially the equivalent, and he had said that before, of an embargo. And now, so we're seeing it drops to essentially a 30% tariff as it relates to the U.S. on China because of the ties to the stopping the flow of fentanyl. But let's talk about some of the big winners today. You're seeing Best Buy rally 11% in the pre-market. Amazon's up nearly 8% right now. Chips are up. Nvidia's gaining ground, up 4%. Tesla rallying nearly 8%. What stands out to you? And Dell's up, rallying as well, up 6%. What stands out to you about the winners here?
Yeah, I mean, all of those countries have exposure, significant exposure to China in one way, shape, or form. For NVIDIA, it's really kind of focusing on the raw materials in order to produce those chips. So Taiwan Semiconductor would be one that would actually see some tailwinds here if we do see de-escalation when it comes to some of these export restrictions here. And then NVIDIA could maybe see an expansion of China sales, H20s, and modifications to the H20s and things of that nature. So that's where you're seeing some risk on. Best Buy, obviously, that's going to be an importer of Chinese goods, especially when you're looking at electronics. That should be a tailwind. Amazon, 60%, 70% of their products in one way, shape, or form have exposure to China. And so that's going to be a tailwind for them. Once again, all of these companies have exposure to China. I think the big focus moving forward is how do we actually, what comes next? In Trump 1.0, what occurred is that this trade deal actually took around 18 months to really develop. And the finalization of that was actually these purchasing agreements, non-binding purchasing agreements, mind you. So if they don't uphold to them, then no one's getting reprimanded for that. Could that be an easy win for China and the U.S., especially when you're looking at this politically and a potential economic slowdown? That probably would be the next case that comes up here. That's something that we've seen in the past. Scott Bessent just spoke on Bloomberg stating that that has been a framework, or could be a framework that they utilize in the future here. And that might be enough for the markets to be calmed down. For now, any type of actual legally binding agreement would probably most likely, especially here in the United States, have to be passed by Congress. And so that could take a lot longer in order for those restrictions, for that process to go through. But kind of look at companies that could actually have exposure to a deal. Once again, the agricultural sector has been hit. China is a big buyer of soybeans, but they have been buying a lot more from Argentina and Brazil. Maybe that's going to be a part of the deal. Liquefied natural gas, once again, another sector that could see some tailwinds there, and maybe some of the expansion into the services market if China does allow that. I think that's going to still be a big wild card there.
KG, let me ask you, for at least when it comes today, is this kind of a everyone's a winner kind of day?
The market's going to perceive it that way, right? And that's what you have to trade on. You trade on the market's perception of where we go from here. Make no mistake, once again, these tariffs are still going to have an impact on the consumer, and it will have an impact when it comes to economic growth. But for now, the market is saying, hey, at least it's not 145%. And so you are seeing a little bit more of a risk on tone. And then we will, once again, we won't really know the economic damage of any of this policy for the next couple of months. And in fact, this readjustment or realignment probably prolongs the economic data as far as how reliable it's going to be in the future, which could also then push back the Fed's rate cutting expectations as well. So there will still be some impacts. It's not like everything's good to go and everything's all said and done.
Yeah.
We just won't see what the ramifications are. And the market's a forward pricing mechanism. So we're looking at what could happen moving forward. I just go back to say, Diane, non-binding trade agreements and purchase agreements are symbolic in nature, but are rarely enforceable by any stretch. And so it's an easy win politically, but when you kind of look at what actually happens on an economic standpoint, it takes so long to be able to try to check back to see if those purchasing agreements are being adhered to. By the time that we do, the Trump administration will be pretty much out of office or out of office once that look back period actually does take place.
And then let's talk a little bit about the move that we're seeing in crude oil. Again, we're seeing this risk on action. Crude oil is above $63 a barrel for WTI, rallying 3% today, extending those gains that we saw last week. Is this all about this U.S.-China deal?
Oh, yeah. Yeah, definitely. Any type of lack of economic slowing being priced in the market is actually going to be pricing pressure to the upside when it comes to crude oil. And actually, we've seen crude oil come up around 14.8% from the lows that we saw a couple of weeks ago here. So once again, that's where you're seeing, I wouldn't say risk on, but just kind of this backing out of economic slowing. Gasoline, if you're looking at the RBOB contract, it's only about 7% away from the highs that we had for the year. So once again, makes it a very interesting dynamic because we've had a lot of these prices coming down. It's had an impact when it comes to inflation. But if you start getting this economic growth story in place again, this risk on nature again, those commodity prices, especially the ones that I've been kind of talking about here, may start to actually rise because of that optimism. And then that would actually be a headwind when it comes to CPI. So once again, the market's going to be kind of in a rock and a hard place here. What are we really focusing on? Right now, it's the economic news and the market headlines. In the trade headlines, that's what you trade on for now. But there's still obviously some perceived risk in the background here, but we probably won't see those for the next couple of months here. So you trade the trends right now, and it seems like the E-mini S&P 500 is at a breakout level at this current level right now. So if we get some more enthusiasm throughout the market session here today, we might see some really aggressive buying activity taking place, or maybe we have a buy the rumor, sell the news type of an event, and maybe we see some liquidations coming into the open.
Some potential fireworks today. So then if we finished at 56.59 on Friday, where do we go from here, especially to the upside? I know you give levels both ways, but clearly we're in for a rally today.
Yeah, we are. So, Right now, 5,900. It seems like it's getting a lot of attention. Even higher than that, when you're looking at the strikes early on in the S&P 500. To the downside, it would literally be throwing a dart at the board, just given the aggressive nature. So
Yeah.
I'm still looking at
Yeah.
around 57.75 there, just from a technical basis. But I would say to the upside 5,900, and that would be a very big deal. I mean, we would be fairly close to actually being green on the year here. We actually are very close to being green on the year here. So a lot of the damage that we saw early on is being made up. Let's see if it's going to be able to hold here, and we get some new buyers who actually kind of step in and deploy more capital, or do we see kind of a sell the news event? But this is a very hard market to short with these headlines hitting the tape.
Yeah, absolutely. And it is very positive news on the trade front. All right, that's our Kevin Green, senior markets correspondent. Thanks, KG.